We've started to see the worrying leading indicators of the sentiment turn, both at the consumer and the business confidence level. We saw that in the retail sales figures. We've seen that in the manufacturing figures. So I think there is consensus around many institutional investors that I speak to that the short-term outlook is much more volatile for the U.S. and much more risk to the downside. We've seen that in the stock market already. I think where there is a lot of divergence is what happens afterwards. Is long-term the story for the U.S. actually a bull story, i.e. tariffs overall will move manufacturing jobs to the U.S. and all the deregulation and tax cuts will then take its place to drive another wind of growth? Or are we actually looking at a structural downgrade for the U.S. in the long term too? That's the open question. But in the short term, I think that what we haven't seen yet, the next shoe to drop, is when all of these tariff moves actually get priced into earnings and guidance. And what happens to the market then is probably not looking like a good picture.
Right, because no one wants to be a chump selling out of the market if they think that it's just a lot of noise and they buy all the noise that we're getting from the administration right now and they miss out on the broader big picture. But you're saying there is still a huge amount of risk on the horizon.
There is a lot of risk. It's completely unknown what these tariff changes do long-term to the U.S. economy, whether the tax cuts and the deregulation, which we're not hearing nearly enough about, by the way, from the administration, are actually going to counterbalance that. To your point a bit earlier, Steve, about, again, asset statements, when does that come through? And does that actually make up for some of the hits to the economy from the inflation side, from the growth side, from what is happening on the tariff side? That is completely an unknown, and it's hard to price that risk in today. I think for investors who think, listen, I'm going to lose out on any kind of stock bump that then happens down the line, play the market sensibly. Play it with reverse convertibles. Play it through back to index trading. Think about UCITS. Think about other ETFs to make your bets in a very diversified, risk-adjusted way, because the single stock picking moments, those seem to be very hard to time.